Hello and welcome to my YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as early career ambassador. This video is relevant if you're studying AAT Level 4 Personal Tax based on Finance Act 2023, or if you're a student of ACCA F6 UK Taxation, or if you're studying taxation unit as part of your undergraduate accounting and finance degree. So in this video, I will be walking through some tasks related to capital gains tax. And this task I have taken from, or in other words, this task I have chosen from AAT Practice Assessment 2, Level 4 Personal Taxation, based on, of course, Finance Act 2023. So as you can see, this task has two parts, part A and B. So the first one is identify whether the following statements are true or false. An uncle and niece would be treated as connected persons for the purpose of capital gains tax. Now, who will be treated as connected persons? So it's normally grandparents, their children, grandchildren, and great-grandchildren, and so on. So direct descendants or direct ascendants. So this could be that your partner's grandparents, your partner's parents, your partner's children, your partner's grandchildren, etc. But this would not cover uncles and aunties, or similarly, this would not cover nieces and nephews. So therefore, this is false. So an uncle and niece would not be treated as connected persons for capital gains tax purposes. So therefore, this is false. Next statement, a disposal of an asset caused by the death of the taxpayer is a chargeable disposal for the purpose of capital gains tax. Now, this is false as well, because on death estate, inheritance tax is applicable rather than capital gains tax. Next statement, a gift of an asset to a friend would be a chargeable disposal for the purposes of capital gains tax. That's true. So disposal is not only just the sale of an asset between two parties. It can be a gift of an asset. In other words, that giving away an asset will be considered as disposal. So disposal means that disposing of asset. Disposal means that getting rid of an asset, giving it to someone else, in other words. So therefore, yes, this will be a chargeable disposal for the capital gains tax purposes. Next part, this is normally this is a typical capital gains tax question, which is they give you multiple disposals and you have to work out the chargeable gain on chargeable to CGT, in other words, or chargeable gain. So Mr. A made a number of disposals of capital assets during 23-24. The disposals have been made to unconnected persons. Now, what does that mean? And why they're giving you that information? So when there is a transfer between connected persons, instead of actual disposal proceeds, normally what is applicable in those situations is that deemed disposal proceeds are applicable. Okay. However, if it is to a disconnected person or unconnected persons rather, then its actual proceeds are considered. But also, we will be looking at if there are any special rules in relation to certain disposals. Okay. So in line with that, we will be doing over calculation, we will be calculating the amount chargeable to CGT, capital gains tax. So calculate the amount chargeable to capital gains tax in 23-24 for each asset disposed of by Mr. A. If your answer is 0, enter 0. It's important to follow the instructions. Enter your answer in whole pounds only as well. So you can see that there is no decimal places that this system will accept. So it's very important to pay attention to those little things, because that can make a huge difference in getting good marks or not getting so good marks. So the first one, Mr. A sold a car for 12,700. He had bought the car for 20,000. Now remember, cars are exempt from CGT, from capital gains tax. So therefore, this will be 0. Okay, painting. Mr. A sold a painting for 10,400. He had bought the painter for 7,200, paying 2.5% auctioneer's fees on the cost. Mr. A had spent 400 in total insuring the painting over the period of ownership. So there are a few things here that you've got to be careful. Now, first of all, painting is a chattel. And remember that there are some special rules in relation to chattels as well. However, those rules are only applicable if the sale proceeds or cost, one of them is less than 6,000. But in this case, you can clearly see that none of them is less than 6,000. So therefore, normal rules will be applicable in here. So I want to show you the calculation for this part of the question. So Mr. A sold a painting for 10,400. Okay, so that's the disposal proceeds. So the disposal proceeds for this disposal is 10,400. Now, there is some information about further information, which is he had bought the painting for 7,200, paying 2.5% auctioneer's fee as well. Okay, now remember you normally have disposal incidental cost. So I'm just writing it just to remind you as well. Yeah, if there was any incidental cost of selling or cost to sell, I would have deducted from here. And this would have given you net sales proceeds or net disposal proceeds. So I'm just writing this so you remember that if there was any, we would have deducted it. In this case, there is nothing. So your net disposal proceeds will be same as your gross disposal proceeds. And then what we do, less allowable costs. And part of the allowable costs will be purchase cost, which is again given to us, and that is 7,200. And also any incidental cost, which in this case, incidental cost or incidental buying cost, you can call it as well, which in this case is auctioneer's fee. So you can either write auctioneer fees or incidental buying cost. In exam, it depends, only one of them will be given to you as part of the drop-down menu. So this incidental cost or auctioneer's fees is 2.5% of this. Which is 180. Now, Mr. A had spent £400 in total insuring the painting over the period of ownership. Now that's revenue expenditure, and revenue expenditure is not allowable when calculating capital gains tax chargeable gain, or when calculating chargeable gain for the CGT purpose. So therefore, in this case, it will be net disposal proceeds and minus purchase cost minus incidental cost, which gives you 3020. Okay, now the next one is Mr. A sold a table for 6,720. He bought the table for 5,200. Now remember, table is a chattel. And if I remind you, what is a chattel? Chattel is a movable property. So table is, of course, a movable property Therefore, it is a chattel. And remember special rules. If one of the cost or disposal proceeds is less than 6,000, special rules will be applicable. So what kind of special rule is applicable in here? That your gain will be restricted. And remember that equation, which is 5 divided by 3 into disposal proceeds minus 6,000. So let me show you calculations for that as well. Okay, so the disposal value, disposal proceeds in this case is 6720, and less allowable cost, which is given to us. Allowable cost is given to us. How much is that? 5,200. And this will give you normal chargeable gain. Okay, we can fairly call it gain because we know that this is not the final figure as yet. So remember that because of this special rule in relation to the chattel, that when you buy an asset at less than 6,000, but you sell it for more than 6,000, then gain will be restricted. So gain will be restricted to, remember a simple equation we used, which is 5 divided by 3 into disposal proceeds minus 6,000. So in this case, it will be 5 divided by 3 into disposal proceeds, which is 6720. Remember, this is given to us, minus 6,000. And this will give us the restricted gain. Okay, so the difference between 6720 minus 6,000, that's of course 720. 720 divided by 3 times by 5, which gives you 1,200. Now, please be mindful here, because the restriction will only be applicable if the restricted amount is less than your normal gain. If the restricted amount is more than your normal gain, then in that case, normal gain will be applicable. In other words, that the taxpayer will opt for the normal gain, so they would not apply the restriction because they will be paying more tax on that. So this will be the chargeable gain, which is a restricted amount, which is 1,200. So let me take you back to the question, so we can enter this value, which is 1,200. Okay, so the next disposal is disposal of a land. Now this land is acquired separately, but it has been sold as one asset. So you can see that 10 acres were bought in 2005, and then another 15 acres were bought in 2010. So when you calculate the chargeable gain on this, so what you need to do is you need to add all of those allowable expenditures and deduct them from the disposal proceeds. So as you can see that 170,000, which is the disposal proceeds, and minus 10 acres piece of land, of course, the purchase cost, you will deduct it. And remember, any incidental cost is allowable expenditure as well, which is at 1,500. And of course, in relation to the remaining 15 acres, the purchase cost is 65,000, so that which will be deductible again. And of course, this 2,000 incidental cost as well. The only cost in this case which is not allowed is 5,000, which is the repair and maintenance. So remember that any revenue expenditure is not allowed as part of the chargeable gain calculation of chargeable gain. Only any enhancement expenditure, which is basically capital expenditure, is allowed. So in other words, that when you calculate this, which will be 170,000, and you will be deducting all of the expenses from it. So which is 45,000, which is your purchase cost for those 10 acres. Then 1,500 will be deducting as well. And of course, the purchase cost of the remaining 15 acres, which is 65,000. And you will be also deducting the 2,000, which is incidental cost. So that gives you 56,500. So the only expenditure which was not allowed here was the repair drainage. Okay. Okay, now this ring is again a chattel because it's a movable property. So Mr. A sold a ring for 5,800. He had bought the ring for 5,000. Now, remember special rates, special rules in relation to the chattels. If the cost of the asset of a chattel is less than 6,000 and it was sold under 6,000 as well, in that case is fully exempt from CGT. So as you can see that this is the case in this situation. So the sales proceeds or the disposal proceeds is less than 6,000 and as well as the cost is less than 6,000. So therefore this will be exempt. So therefore 0. Okay, so this task was a good task in that sense. Now the next task, which is about shares, and especially the shares matching rules, the students sometimes get confused with that. So it will be a good idea that to go over that together again. So if you can take a picture of this, please, at this point of the video, and then I'm taking you to the Excel sheet. So we can go over this together, or in other words, that you can just you will be watching the how I calculate the chargeable gain in relation to a shares or selling shares. So I will be going through the shares matching rules as well as part of it, just to remind ourselves. Okay. In relation to shares and securities, there are shares matching rules, and what these rules are. So the shares matching rules, the first rule is same day acquisition. In other words, that we will presume that if the shares are acquired on the same day that when we sold them, we will assume that we sold the same one. Okay. The second rule, which is a little illogical if you think about logically, that any shares acquired in the next 30 days. Now, practically, it's not possible because if the shares you have not acquired as yet, how we can presume that we have sold these ones? But this is from HMRC, this rule that any shares you acquired within next 30 days, we will assume that those are the ones we sold. Okay. And this is because if you think about the market value of the shares will be kind of somewhat similar, the same day acquisition and in the next 30 days. So in other words, that it is in the best interest of the taxpayer as well, because it will make less gain, and taxpayer will be paying less tax on that, if that makes sense. But yeah, but otherwise, I mean, if we look at practically, then this is not possible. The shares you have not acquired them, how you can sell them. But yeah, for the CGT purposes, we'll be looking at shares acquired in next 30 days. So this is next 30 days from the day of sale. And if this did not happen, then we will be looking at something we call FA 1985 rule. Okay, in undergraduate accounting degrees, we normally use the word Section 104 pool. So it's the same thing basically. but in AAT they use the word FA 1985 pool. Now, FA 1985 pool, these rules were introduced first time in Finance Act 1985, and that's why we call them FA 1985 pool. But if we go to the specific section of that Finance Act, which is Section 104 pool. Okay. So these are the rules which we will be applying in this question. Okay. So in this question, we've been given a situation. Mr. M holds shares in MJJ Limited and has made a number of transactions over the years. Details of the transactions are this. On 5th of May 2013, purchased 1,000 shares at a cost of 36.20 per share. On 12th of August 2015, sold 300 shares for 42. And on 2nd of November 2015, received a 1 for 20 right issue at a cost of 35, and then sold again shares, 400 shares for £50 per share on 25th of April, and on 7th of May 2023 purchased 200 shares for 46 per share. Calculate the gain Mr. M made on the sale of shares for 23-24. Now, if you think about this question, we can clearly see that 200 shares the person has acquired within 30 days. So remember, there is no same-day acquisition, but there are 200 shares acquired. I'm talking about the final selling transaction, so which was sold 400 shares for £50 per share. That's the one on 25th of April 2023 I'm talking about. Yeah. So for these 200 shares, out of the 400 shares this person has sold, 200 shares are sold, which were acquired in the next 30 days. So remember, as per rules, the remaining 200 shares, we will be taking it from here. Okay, so therefore, we need to do some calculations in terms of the FA 1985 pool first, and then we can calculate the chargeable gain on these shares. So what we can do here, first of all, we can say, so 5th of May 2013, sorry, just 1 second. So here we can write the details, but here we can write the number of shares. And here we can write the total cost of the shares. So as you can see that on 5th of May, so this will be in chronological order. The first you bought first, our first transaction will go first, and then the second transaction will go second, and so on. So I will write here purchased, and on, we can write the date here as well. In exam, I mean, you can write the date as well, so which is 5th of May. Sorry, I thought that I shared with you the Excel sheet at this point, but then I realized that I didn't. So purchase shares on what date? 5th of May 2013. Thousand shares, and at what cost? So they given you per share cost, so which will be 1,000 shares times by 36 point. So the per share cost is 36.20. And what happened next? So on 12th of August 2015, sold 300 shares for £42 per share. So in this case, we will write sold on which date, which is 12th of August 2015. How many shares this person has sold? 300 shares. So the cost of these 300 shares was, remember, 300 times by per share cost, 36.20, which is that. And every time we sell shares, we calculate the subtotal of the pool. So the total number of shares after this transaction are 700, as you can see here. And then the total cost which is left is this minus this, which is this much. Now, what is the next transaction there? So on 2nd of November 2015, received 1 for 20 right issue at a cost of 35 per share. So here, right issue, which is on 2nd of November 2015. Now, how you calculate that? So it depends on the existing number of shares, which was 700, and times by 1 divided by 20. For every 20, one new right share. So if you times something by 1, it gives you the same value. So we can directly do divided by 20. So we can see that there were 35 right shares issued on that day. And what was the cost of those? Remember 35, and they're given you times by 35 per share as well. So the right price was 35. Now, after this, there was a selling transaction. So remember that after every event, we calculate the subtotal. So subtotal at this stage will be 700 plus 35, which is that. And the total cost of these shares will be that plus this, which is this much. So now we sold the shares, and every time we sell the share, that is important we calculate the average cost of the shares, or average cost per share. So which will be total cost at that point divided by total number of shares, which has given us this much. Now this point is very important though. If you will round it up, the per share cost, your answer will be incorrect. So you cannot actually calculate the or round it up at this point. You can round up the final values, but not the per share cost. That's very important. So we sold at this time 200 shares. Why 200 shares? Remember, although we sold in total 400 shares, 200 shares we bought within the next 30 days. So that it will be cost of those shares, remember, as per rule. And then remaining 200 shares, we will be actually including from or taking it from FA 1985 pool. So those 200 shares and those 200 shares, the cost of those will be this times by that, which gives you 7228.57 and so on. So this amount, like I said, that you will be writing the whole numbers, but when it comes to this one, otherwise it will give you a different answer, and that won't be correct. So this is, I'm just typing now 722. So this is, we calculated, of course, 200 shares times by average share price or average share cost at that point. So this will give us the remaining pool balance as well. So 735 minus these 200 shares. So we got 535 shares left. And then this cost minus the cost of the shares sold. Okay, so we done the calculation in relation to the FA 1985 pool. Now what we need to do, we need to calculate the gain, chargeable gain. So we will write the disposal proceeds of the 400 shares, yeah? So this will be 400 shares times by, and they're given you the per share price at that point, which is £50 per share. Okay. So 400 times by 50. That gives you 20,000, the disposal proceeds value. And less 200 shares, okay, which was, remember, that bought within next 30 days. and then the cost of that is £46 per share. So which is bought on 7th of May 2023, which is within 30 days. Remember, from 25th of April to 7th of April, the 7th of May. So this will be 200 times by 46. We'll be deducting that. And please do write the allowable cost first, yeah. And then of course this is allowable cost as well. And this we have calculated it as part of the, so this one we will be just writing the total amount there, yeah. So total amount which is taken from the FA 1985 pool, remember 7229. And this will give us chargeable gain. So the chargeable gain is this minus this minus this, which is 3571. Okay, now a couple of more items can be tested as part of this question. Is bonus shares, for example. The bonus shares, remember, you need to just include the number of shares because these are free shares. It did not cost anything to the taxpayer. So in other words, that let's suppose that if this was bonus shares, we would have just included this 35 but nothing here, and then you would have calculated the total, and then at that point it would have been 735 number of shares, but this would have been same as this. Okay, so this is applicable only for individuals. For companies, for corporations, if you're studying business tax, those are different rules. Okay, I hope that this video was useful, and I will be making more videos on capital gains tax, inheritance tax, also some income tax videos. And once I finish with the personal tax, then I will be moving on to business tax videos as well. So if you are studying business tax, or if you will be studying business tax on based on Finance Act 2023, then please like and subscribe the channel, so then you can get the notification of those videos as well if you have any plans of studying those in future. Okay, thank you very much for watching. I will be back with another video.